What's up? It's your boy Marlon UCC back with another Bitcoin price reaction video. And today is the 13th of March 2023. And ladies and gentlemen, the tables have changed. We've just received word, a joint release, as you can see on the screen, by the Department of the Treasury, the Board of Governors of the Federal Reserve System, and the FDIC, Federal Deposit Insurance Corporation, Washington, D.C. The following statement was released by the Secretary Janet Yellen, Federal Reserve Board Chair Jerome Powell, and FDIC Chairman Martin Gruberg. Today we are taking decisive actions to protect the U.S. economy by strengthening public confidence in our banking system. This step will ensure that the U.S. banking system continues to perform its vital roles of protecting deposits and providing access to credit to households and businesses in a manner that promotes strong and sustainable economic growth. After receiving a recommendation from the boards of the FDIC and the Federal Reserve and consulting with the President, Secretary Yellen approved actions enabling FDIC to complete its resolution of Silicon Valley Bank, Santa Clara, California, in a manner that fully protects all depositors. Depositors will have access to all of their money starting Monday, March the 13th. No losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer. We are also announcing a similar systemic risk exception for Signature Bank, New York, which was closed today by its state chartering authority. So it seems to me like there is a systemic, as we explained in yesterday's video, there is a systemic banking crisis taking place right now, because all these three bodies, institutions, have taken it upon themselves to protect the banks in the US. So it brings a lot to question. How much or how many banks are currently insolvent in the US, and how long can the Fed keep doing this? So as I was reading, shareholders and certain unsecured debt holders will not be protected. Senior management has also been removed. Any losses to the deposit insurance fund to support and insure depositors will be recovered by a special assessment on banks as required by law. Finally, the Federal Reserve Board on Sunday announced that it will make available additional funding to eligible depository institutions to help assure banks have the ability to meet the needs of all their depositors. The U.S. banking system remains resilient and on a solid foundation, in large part due to reforms that were made after the financial crisis that ensured better safeguards for the banking industry. These reforms, combined with today's actions, demonstrate our commitment to take the necessary steps to ensure that depositors' savings remain safe. So this is actually very worrying, but we're not here to discuss this majorly. But this, they have done this so that they can protect against the bank run that has started to be seen on Saturday, and this consequently has had such a powerful effect in the market. So as you can see, we've had a melt up. First had a squeeze to the upside from 21,000 to 21,700. So it was actually setting up to be a very interesting week had the FDIC and the Fed not stepped in. And as you can see on the liquidation charts, there have been so many long position liquidations over the past few minutes, and we expect that we shall see more in the coming few hours. So this is the Fed actually doing something sort of an unofficial quantitative easing. So we can see that the QE season is back, and the Fed Chair Jerome Powell is simply saying F your puts. So this might actually be opening to quantitative easing. So as you can see, we have seen a run up in liquidations worth $105.5 million. Another liquidation, this was supported by a massive 290 million for volume up, This was supported by $1.9 million liquidation in 100 million positive delta perpetual volume. This has also been supported by $4.3 million in liquidations, and as you can see in the last move, barely 2 hours ago, this is a $4 million liquidation, and this is a 5.3 million liquidation supported by $263 million in perpetual volume and $20 million in spot volume. Same case as this move, this candle up here, which is a $229 million perpetual positive delta volume. So this melt up, I expect it to continue. So this might act as support. This might also act as support if we do not squeeze lower to do a small retest. But in all shapes and sizes, it seems like we have a sort of a easing back, and bulls have piled in. They were waiting for any excuse to move into the market. So this is quite some news, and we shall continue monitoring. But at this point, I really do expect that each and everything so this is the clean raw chart. So we currently have 19.6 as the floor. This is the current floor, and considering that we've broken this area, expect this area to hold, and I expect us to see a test back to the $25,000 Bitcoin region. So this is currently what is happening right now due to the intervention by the Fed and the FDIC. So normally the FDIC was supposed to just protect depositors up to $250,000 deposits, but now they are protecting each and every depositor, which begs the question where all this money is coming from, considering there is no liquidity in the current markets. But we are here to observe and see, and as you can see, there are so many longs that are piling in right now on spot, on perpetuals. It is setting up to be a very interesting session, very interesting New York session. Also this current Asian session is setting up to be very interesting. So considering easing has started, we have no choice but to open long positions after thorough retests have been done, because it seems like there is actual systemic risk in the banking sector. If I was American, I would not be banking with banks, not be depositing my money in banks. I would just take my cash and review my options. But anyway, it is what it is. This is the current market position. So each and every crypto has pumped. The only thing that is not up is the US 10-year, which I expect to take a massive walloping over the next few sessions, probably move back to 3.3. The VIX, which had shot up, is currently moving downwards. I expect this to go down. So whatever is going to happen right now is puts will get annihilated, that's for sure, over the next coming sessions, and the bulls finally have an excuse to run up this market to levels they wanted to run. But this will be very expensive. This will come at a cost, because we're not really done with inflation. We're still battling inflation. So at this point, they are trying to escape hypercontagion, but I think that the markets are already spooked. So we just wait and see. Be careful, protect your capital. Otherwise, have a blessed day. This has been Marlon coming to you with this piece of news. So let's just observe and see what the market has in store for us. Peace.